Well, big investors have been sharing big ideas today at the Capitalize for Kids Investor Conference in Toronto, and that includes David Rubenstein, who you might know as the host of the David Rubenstein Show on Bloomberg, but he also founded the Carlyle Group more than 3 decades ago. It is now one of the world's largest investment firms, and he's standing by with our Amber Kanwar at the C4K Investor Gala. Amber.
Thank you so much, Sean. That's right. I'm sitting with David Rubenstein right now. Thank you so much for being with us, David.
My pleasure.
I want to start talking about the markets on a day where it's 36 years since the 1987 crash, which if you look at on a chart, you can now barely see. Does that tell you something when you're looking at, we get so obsessed about next crises, about riding out these economic cycles?
Well, of course, when the markets went down that day, the markets went down, I think, 508 points. And that seems like a gigantic amount. We've since topped that sometimes because of the trials and tribulations we've been through in markets over the years. But clearly it was a point where people recognize that the markets can really affect the economy. And if the markets go down or up appreciably, it can really affect the underlying economy. So yeah, I think I lived through that, and I remember looking at them, the screens those days. You're too young to remember this, no doubt. But I would look at the screens and said, oh, I just started this new private equity firm, and the first week or so we started it, we're down 508 points. So I wondered whether there was a future to my firm.
So you've ridden out a number of cycles now, and here we are standing on what feels like unprecedented times, but isn't. Interest rates, maybe at 5%, maybe hanging out there for a long time. What does that mean for asset classes, stocks, bonds, private opportunities?
Well, of course, the famous investor John Templeton once said, the biggest mistake you can say is this time is different, because things always kind of repeat themselves. So yes, it always seems like when you're in the middle of a windstorm or something that things can't get worse. I don't think right now we're in a terrible time. I don't think we're heading into a recession.
You don't think that?
I don't think there's a recession right now that's imminent. There's always recessions that come. They come on average every 7 years. But right now, I don't see one that's imminent in the future. Now, one could happen, but I don't see it based on what I've observed.
Let's talk about what you observed, because this time last year, it was a 100% probability we would be having a recession right now. Instead, the U.S. economy poised to expand at 5%.
I think consumers basically had a lot of spent up demand. I think the U.S. economy has been in pretty strong shape relative to the European economy and certainly relative to the Chinese economy. So, but your point really is well made in the sense that 100% of the people thought we were going to be in a recession a year ago. Now people generally think we're not going to be in a recession, but they could be wrong. So I think it's very difficult to predict recessions. People are very good at predicting them after they occurred. They always say, I knew a recession was going to happen. Here's my memo that said it was going to happen. But nobody really knows.
One thing that the market then is trying to get a handle around is what is the next move by central bankers?
Right.
You actually just did an interview with Mark Carney, the former Bank of Canada governor, Bank of England, and now Chair of Brookfield. And he says one more rate hike by the Fed. I believe that came out in your interview. Do you agree? Do you think that's going to happen?
The conventional wisdom, as a Canadian once said, John Kenneth Galbraith, is almost always wrong. But the conventional wisdom is that there will be one more rate hike this year. But there is a Fed board governor today who said he's not sure there should be another rate hike. So who really knows? But I suspect probably there'll be one more rate hike. But next year, I think people think there won't be a lot of rate hikes, and maybe we'll begin by the latter part of next year to go down. But again, nobody knows. It depends on the numbers. The Fed is very driven by numbers, and they want to see what the numbers are. They don't want to tell you what they're going to do 3 months in advance because they really don't know.
Are you concerned about problems brewing? I mean, there's no shortage of things to be concerned about. War, now 2 wars, interest rates, rising oil prices. I mean, all those things are connected. But as a private equity investor, it is your job to sort of sniff out what are the problem spots out there? What are the problem spots out there as you see it?
Well, there's always geopolitical risk whenever you're investing, and clearly what's happening in Israel, what's happening in Ukraine is a geopolitical risk. But I think overall the biggest geopolitical risk we face right now in the United States is the dysfunction of the U.S. government. The inability of the government to actually get operating is a big problem in the House of Representatives. I'm hopeful that at some point the House will be able to come together and figure out how to get through regular order and at least be able to pass necessary bills. When people look at our country from abroad, they say, how can you tell us how to run your country when you have a hard time even getting organized in your own country? That's a big geopolitical risk.
it speaks to, and maybe you can weigh in on this, is it a shrinking of American power at a time where these conflicts maybe could use it?
The United States was 50% of the world's GDP at the end of World War II. Now we're roughly 18% of the world's GDP, so we are not as significant economically, but we're still the leading military power, geopolitical power, I would say technological power, and I think the most important economy in the world is still the United States. So I think we have the power that we had 10 years ago and 20 years ago, but I don't think that 10 years or 20 years or 30 years from now will be as powerful as we are now, because we have emerging markets that are emerging, and obviously China is going to become the largest economy in the world probably in our lifetimes.
You mentioned the dysfunction in Washington. There's been a lot discussed about the fiscal situation in the United States and whether or not this kind of move we've seen in bonds is a return of bond vigilantes. What do you think?
Well, we have $34 trillion of debt. We are paying almost as much in interest on that debt as we're paying in our defense budget. But at some point, it's not going to be sustainable. I'm hopeful that at some point, the Congress will figure out a way to reduce the indebtedness we have, but to be realistic about it, you can only increase taxes so much, you can only cut spending so much. The only way out of this, unfortunately, is to devalue the currency and in effect pay off in inflated dollars, but that's many years down the road. My children and grandchildren will be paying off this debt.
And I know you think a lot about legacy. It's part of why you're here at Capitalized for Kids. But you do something that not a lot of other people do, is you're also dabbling in journalism, in doing interviews with really important people like Mark Carney. Why do you like to do that?
Well, when you get to be a certain age, you have to do certain things to keep your mind active. I'm always worried if my mind isn't active that something bad can happen. So by preparing for the interviews, as you've obviously done, you keep your mind active. So I like doing it. I like talking to smart people, and it's fun to be on the other side of the table.
What have you found, I know I ask the questions, but what have you found is the key to doing a good interview? The
key to doing a good interview, as Oprah Winfrey told me when I interviewed her, is listening to what the person says and be prepared to pivot. Because if you only have your list of questions and then you go down and you're not listening to the person, it won't be as effective an interview. Also, don't put your ego into the interview. Don't tell somebody how smart you are, and here's what you think, and then what do they think. What you should do is listen to the person. Let them do the interview, and not the interviewer become the subject of it. So people should pay attention to the interviewee and not the interviewer.